Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We wouldn't go all in on EGRX. We love that no one knows exactly what the share price is, and we love the solid candles on the chart.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everybody, welcome to Laughing Stock. How are you today, Dane?
Good. How are you doing?
Yeah, I'm good. I'm just checking the chart here for EGRX, and I saw on Thursday, I think it had a drop of 90%, and then all of a sudden it recovers to to 150, and I see in some places there's actually reported that the share price is currently 10 cents. And then in TradingView and most other places, it's reported $1.50. So this is going to be interesting to see where it opens on Monday, I think.
Yeah, I'm sure being that the volume on Thursday was 15 shares, that there's a lot of eyes on this one.
I saw the average dollar volume is like 13,000. I've never seen anything that low. But they have a 20 million market cap. And I think this is a biotech as well. So there's a lot of red flags, but the laughing stock is all in on this.
Yeah, I mean, I have all my buy orders in at 10 cents. So that way, if someone does sell, I just pick it up at 10 cents.
Yeah. No, it's funny how you stumble upon so many stupid looking charts, right? This is one of them. I've actually started to screenshot some of the crazy charts I find to just have a collection. I thought that would be funny at some point. How's your week been though?
I mean, I guess I'll say it was okay. I ended up being break even for the week, and I was up, I think, almost 2% at one point, and just Thursday, it was a choppy week. So yeah. I'm actually okay with the fact that I was back down. I didn't really break any rules, and I thought my sell rules and stuff were all pretty good. So it's not that it just happens. It was just a tough week. So
it was a tough week.
Yeah, and I hit some good names. I've actually been doing a little bit of a newer strategy where I'm buying pullbacks occasionally, and it's actually been pretty successful. I'm actually kind of surprised. I've picked some really good names doing it. So I don't know. I think I built a screener specifically for it to try and buy some stuff on pullbacks. And I watched he works with William O'Neill, and he buys pullbacks. I can't remember his name.
David
I think
Ryan.
it's Chris something.
Okay.
But he buys pullbacks, and I was just listening
Oh
to some of
yeah.
the stuff he said. But
Yeah.
this was after.
He's on Trader Lion, I think.
Yes, yeah, he's on Trader Line.
Yeah.
So just a different way of doing things. But if you can get into stuff at that really low amount, and just kind of keep your risk locked in. But like I was saying, I've kind of changed my strategy in terms of buys, and I'm just going back and forth if I want to use like the intraday chart for my risk, or if I want to use more the Minervini approach and kind of have it pre-planned before, like almost the day before, and use some kind of low more on the daily chart as opposed to what like Kalamagi does, where he's looking at like the intraday chart to determine like what the low is. I see both having their advantages.
It's a little bit of the your life situation too, though, because you work, so it's not
Yeah,
so
and
easy to sit and pay attention to like when something makes a new low and then maybe pulls back a little bit, and then you can jump into a position and use the low as a stop and stuff like that.
yeah, and it started to dawn upon me of why the importance of having some kind of volume contraction phase is so important, because I feel like it's not only the point that you want the volume to be contracted just simply because it makes for a decent setup in terms of stuff popping, but like that allows you to take the largest position with minimal risk.
Yeah.
If your distance from buy to stop is like 3 or 4%, and you can sneak in with like a 10% position off that or something like that. That's a winning strategy just right there on that, because anytime one of those takes off, I mean, you can have a big thing with barely any risk. And if you're shooting for, 3 times whatever your risk is, that can be pretty successful. So
I'm when I'm reading through the books and watch all the interviews and stuff like that, it's just like, you learn a lot of things from different people, and you try to piece it together with what fits you and the way you look at things, and but there's actually, I think it's a pretty high difference between a guy like Minervini and Kulamagi, because in terms of their hit rate, Minervini, he says he hits he gets one right, 50% of the time. Is what he operate with, like pretty high hit rate, which is due to his VCP pattern, right?
yeah, I think he's very specific in what he picks. And I know he always says that he's using fundamentals. So I think the bigger idea is it's kind of he takes more the O'Neill approach, where he's just looking at stuff that's not only is it strong, but it does have some kind of sound business, as opposed to like some of the more speculative, like more narrative type stocks.
Yeah.
Which but that's what makes it so. I don't know. That's what I like about this investing is just like there's guys out there who just look at numbers, and there's guys out there who there's just so many different strategies you can do. So
yeah, because Kulamagi, they look at the kind of the same things, but he says that his hit rate is like 20%, which is quite low versus Minervini, and that has if you do like the math on that, it's a big difference. It matters a lot, right? But then Kulamagi gets higher winners when he first win, I guess, and that's what makes him hugely successful. And I'm leaning more towards that side right now.
Yeah, and I mean, this is why Christian this is why he says his strategy, the ADR, is so important, because if you think about it, like if you're taking, let's say 0.5% risk or 0.25% risk, and you're not in stocks that really move in a short amount of time, and I know he usually sells half his position or whatever he does and then keeps it for the 10-day. But if you're not, you have to beat your risk rate by like 5 times if you're only getting 20%. Like if you do the math, if your hit rate's only 20%, like you have to really outperform. Like you have to always beat your risk by like 5 or 6 times.
Yeah, and you
So
have to have those winners, and those winners are what makes you outperform, like he's doing. But because without them, it would be a losing strategy, I think, very
yeah,
quickly.
basically.
Yeah,
Yeah, I mean, and even if you go below, like if you go down to like 30%, you pretty much have to always be at least 3-1 or even higher, usually 4-1,
yeah.
depending on what your actual percentage loss is. So
But I find
it's
it
not
hard. Like it's
easy.
not maybe in a bullish market. Like I messed up a little bit on this bullish market in the beginning there, so I have not been with the style I have now currently in an entire bullish market. So I don't know this for my strategy, but I can only assume that in a very bullish market, it's easier to get close to 50%. But I mean, Narvini says then he gets even 60% and stuff like that. I just find it very hard to consistently pick one right in 2 tries, and I don't know, what do you think, like what are you aiming for with your hit rate?
I definitely like I've gone back and forth quite a bit, and this is part of the reason I feel like it hasn't led to outperformance just yet, is because I'm just trying to hone in more on where I find I'm more successful.
Yeah,
I see both strategies potentially working easily,
yeah,
but like you said, with Minervini's approach, you're not necessarily going for home runs. Like Minervini's happy to take like 3 times his risk return and
yeah,
just sell the stock almost right there. Like
yeah,
he's said that multiple times, that he's not always looking for these bigger ones, and he's more apt to sell 2/3 of a position when he's up 20-30%, and maybe let a small chunk of that ride on something,
yeah.
and then maybe wait for a pullback, and he'll pyramid in later on that. um,
I feel like he is way more mathematical with his approach than Kulamagi is. Kulamagi is also mathematical, but he's more like a bit like more free, I think, in his methods.
well, in the idea that I think he allows stuff to really bounce, essentially.
Yeah,
He's not afraid to go into like a crazy biotech, and you have to think though. But this is like one of the things I was saying. If your risk, like Minervini's looking at only the daily chart, he's not
yeah,
looking at intraday because it's just too much noise for him. So when he goes into a position, let's say the stock's like $2, or let's just say $2, and the low in the past 10 days is $1.90. Well, he knows his risk is 10 cents there, and maybe he looks and he thinks it's going to break out at like 205, so now it's a 15% or 15-cent risk. He's going to scale in on that, and he's going to put that buy order in probably the night before and just like let it go. And
yeah,
if it triggers, it triggers. And that's why he's not taking very many positions, because not only is it got to have all the right things, it's got to have, it's got to be a stock that's moving, it's got to have stocks with decent fundamentals, it's got to be a perfect setup. Then he's also making sure when he buys in, that risk is really small so he can take a decent sized position. And I know he said he does sometimes take smaller positions, but at the same time too, I mean, like, he's not going to take a really small position just because the math works totally against you. And the reason I say that is, if you think about it, if your distance between your buy and your stop loss is a decent amount, once it gets over, like, let's say that's a 10% difference, you need the stock to go up, 30%, 40% to hit that 3 to 4 time risk. If it's 5%, you only need it to hit 15 or 20% for you to get 3 or 4 times your risk.
yeah,
So you just have to think, just statistically, I mean, how easy is it to find a stock that goes up 10, 15%? That's not that hard. I mean, it happens all the time. How hard is it to find one that goes up 30, 40%? It's now it's a lot harder. Like, those are much rarer, especially given a shorter time frame. And I know Minervini allows things to kind of ride for a little bit. He's not always one to sell out in like a day or whatnot. I mean, I'm sure it happens, but he's also like, I feel like he's focused on pretty big companies. So, he's probably not going to get stopped out of that stuff in like one day, where the Kulamagi approach is, or Kulamagi, sorry, I'm probably saying your name wrong all the time. And, his approach more is like, he'll go into like a biotech, but he's looking at the intraday chart. So, day opens and it starts to pull back at some point. He's going to use that as his low now, and he's going to get in as soon as it starts to kind of come off that. And that way his risk is based just on that day move. So let's say the stock was down, let's say it was the same idea. This is $2 stock. And on that particular day, the low is like, let's say 196 off the open, and then it starts to come back up. And let's say he sets his at $2. Well, his risk is only 4 cents. So he can take a pretty decent sized position. If he gets stopped out, it is what it is, but it's only based on that intraday chart where he's getting in. So it allows him to possibly scale in heavier, which is probably
to do that to get the results that he has, because
right.
yeah, and that's kind of what I or we have been struggling a little bit I guess. Like I'm trying to get a heavy position into something that works, which is pretty obvious, right? But it's not easy because things move so fast, and all of a sudden the distance down to the low of day has gone past my filters and stuff like that. So I'm sticking with still a big position, or I'm doing 10% positions, but I want to get into 20% position on some names, and I kind of want to do it straight away, because I find it like on the biggest winners I've had now recently, it's I rarely get a second opportunity to add to the position.
Yeah, it's tough. And I've thought about it quite a bit, because like we're talking, rate of risk and return and all that. And instead of just trying to scale in, because this is one thing I've definitely changed in my mentality is, instead of always thinking like, okay, I'm going to take a 2.5% position and then I'm going to add 2.5% here or whatever I'm doing. Let's say I get a 6% position in something, and now it starts to move up, and let's say my stop is, I want to use the 10-day as my stop. Well, if I'm let's say a 5% from that 10-day moving average, but my overall position, let's say, is up 10%. Well, then you can figure out, well, if it was the pullback to the 10-day and I was able to get kicked out, like how much can I add here without like totally eliminating my gains? So maybe that comes to, you can add 1.5% on that day. Well, you can add 1.5% there and keep that risk at the 10-day moving average essentially, and use that. So it's almost like you can pyramid in slowly and scale. And what makes the most sense to me is, instead of really doing that, let a stock run for a little bit and sell most of your position. And this is how I'm assuming Vinny does it. So he let's say it's been 3-4 days, it's been up and you're up 20%. He sells 2/3 of his position. Then it pulls back, and you watch it all the time. Stuff pulls back to like a 10-day moving average, and then it kind of dips there for a little bit and then pops back off that. Well, he keeps that position in play there. He doesn't get rid of it. He keeps his stop at break even at that point. But then if it starts to break out again, he'll add a whole nother position based on whatever that risk is right there. So let's say initially he took a 10% position. Well, he's probably got like 3 or 4% left in the stock. Well, let's say that it sets up again that it's another 10% that he can take on. He'll do that. Now he's got a 13-14% position for that second part of the move up.
Yeah.
So as opposed to just being like, it's up so much and I'm going to add 10, it gives you a little bit more breathing room in the time that you have to do it, as opposed to just like, because I know what you mean. Like if you're doing it our style, or at least how I was before, you want to get in as quick as possible, because it's really hard to not have a pullback on just a single day and get wiped out.
Yeah, and it quickly ruins your gain, and then you add, and then it goes against you, and then it's a break-even trade instead of a pretty good gain, and that's just very annoying. But I think you also have to try to get into these things with a heavier position to outperform. Like this is probably the nuances and the art to this that I need to get better on. Because,
and that's why I said my biggest, this is why I'm really understanding what the VCP pattern is about. It means it's a good setup, because you can get in on a pretty tight risk range, and that way you can take decent sized positions. Because so for instance, I've created in part of my screeners now that if I'm going to get in a position and it's, let's say I want to keep my risk at 0.25%. If I want to keep it at 0.25% and I want to be able to beat that by 3 times my risk, I want to make sure that when I get into a position that I can put a 5% position at least. 10% would be better. So you can set it and say, hey, I want you to screen and only find stocks that if I get in, I could actually take a 10% position with only 0.25% risk. So if you screen and you look for setups like that, it really narrows down the list. So it's not only does this look like it's a decent breakout setup, but it looks like a decent breakout setup that can actually get the return I need. That's the second part that I'm really focusing on now, that I realize, like, you have to make sure you're getting that, because otherwise the numbers are just not going to work in your favor. If that makes sense.
Yeah, 100%. I've tried to use ChatGPT and other, models to try to simulate numbers I feed it on yearly performance and stuff like that, and also like try to use Kulamagi's numbers that I can find that he has said. Like I know he speaks roughly now, but just to get an idea. And on most of those simulations, you have to get these big winners with big positions, and we have talked about it before. I think like when you see on TraderLi and the people who won the investing championship and that type of things, like they always speak about a trade that went their way with a heavy position, and they also added to it multiple times and stuff like that. And I think that's just like, you need to get 1 or 2 or 3 or 4 of these ones in a year. That will make a big difference on the total.
Yeah, and like another thing too is, like, when you watch like Lance or like William O'Neill and stuff, they say like, okay, this is where you buy, and then they say this is the next buy zone, this is the next buy zone. And like what they're basically saying is they're doing exactly what you and I are talking about, but they're playing to the chart. So let's say they take that 10% position, it goes up so much, they sell off a little bit, they're holding that position now for a while, and they have somewhere like Kualamagi does, where it's like a 10-day or a 20-day moving average, that if it breaks that, they're out. But for the rest of that position, they're just riding it. And then when it sets up again, they take, if hopefully the risk is set up where they can get back in, and then they take another 10%. So even though it's not like they're taking us like a crazy position, depending on where they're at in there, and don't get me wrong, sometimes you can scale in and get like a 30-40% position, but those are very rare. But their point being is that most of the time, the way they're doing it, they're guaranteeing that they're capturing a big move, then they get some gains with that move, they wait for it to reset up, and then they add more back onto the position, as opposed to trying to get this whole big position and capture everything on one move up, because most stuff doesn't have that big move. Don't get me wrong, stuff does, but it's just it's rare. I mean, if you get 1 or 2 of those in a month, like that's not bad, because trust me, 1 or 2 in a month can make a huge difference. But it's just tough.
I think then those plays that they speak about are the relative strength winners coming out of a bearish market. That's where you find these opportunities the most, where you can get a position in, it continues to go up, you sell, you find some new bases, and then you can add to a big one, and you just run with it for the entire bull market.
Right.
So we are way past that point right now. Of course, we are way into a bull market already. But I'm sure you're gonna find stocks that you can still do this on. But I don't know. It's something I need to master more. Something I need to practice more on, and also like have the mentality that when you see that opportunity, you need to have some balls and just go in with whatever you can and take that position.
Yeah, and just to pull up the chart, just to show you kind of what I'm talking about. Can you pull up the chart for ALXO?
ALXO.
Yep. All right. So you can see this one has a bit of the flag pattern where it steps up and moves. So for instance, if we go back and we look way back at August 15th.
Yeah. Here.
Now I know this is a penny stock at this point, so I know probably not many people are looking here, but just for shits and giggles, you can see how quickly that is a tightening flag there. Yeah. And August 15th, if you were to buy on that day, or even let's say you bought like Kualamagi does on August 18th, that day that it really takes off.
Yeah.
You can buy it like probably around 71 cents, and then your low of the day is like 66. So that would be your first entrance into this one. And let's say you rode this all the way up to the 95 cents or whatever, and you sold, you know, a good chunk of your position right there, because that would already be like a 30 or 40% gain in one day.
Yeah.
And then you hold the rest, and then you can see that it kind of bounces around, and then you get stopped out on September 2nd, which is the 10-day moving average break.
Yeah.
But now this stock's on your radar. And then once again, it starts moving sideways. And then you can see starting September 15th, you get 4 candles in a row that are pretty tight.
Yeah.
And once again, I mean, this is where Minervini's doing his homework and starts to notice that these candles are really tightening here. They're actually the 20 and the 10-day catch up. I mean, these are all, you know, basic stuff. And if you can take this on, let's say September 18th, somewhere in there where it's bouncing back up, the low of the day is 103. So you could get in at like 105, which means you only have a 2-cent risk essentially. So you could take a pretty big position there, and then boom, next day it breaks right off. And that's because there's so many people on that day that are starting to see that come through.
Yeah.
And what I think happens a lot is the night before, everyone starts to see this pattern. They start to see on September 18th that everything's looking like it's very contracted here. And a lot of them try and do that by first thing in the morning on September 19th. And they set their low at probably that 101 from September 12th. But that way you can get a pretty small position size. And then don't get me wrong, it jumps right off the rip. And that's also now a breakout too, because right around like $1.22 is the breakout from that previous like flag.
Yeah.
And then from there it rides up. And then once again, you could hold this for, you know, sell this off in a few days and ride it until it breaks the 10-day moving average. And then once again, it starts to, you know, it pulled back and it, you know, it's been pulling back, and now it's really broken the 20-day. So this is probably going to be a longer move until it starts to set up again. But this is a good example, in my opinion, of like ones that how you would play it as it's going through. And if it didn't break the 10-day on that flag back in like September 2nd, this would be one that, you know, you would have held part of your position, and then as it got close to breaking out again, you would have added to it.
Yeah.
So, you know, it's just kind of like the way I feel like you have to start playing these charts, at least in this strategy.
No, it makes a lot of sense. And then if you sell half, and in plug I sold half after a short time, and then I sold you know, a half of that half position again a few days later.
Mm-hmm.
And then I sold when it dipped below the 10-day moving average. But if I just had kept that, well, plug turned around this week, so it wouldn't have worked. But let's say it didn't turn around, but it continued to set up, and I could enter again with, like you said, then on another 10% position if I liked it, and I would add that to the remaining that I have, and then all of a sudden I have a pretty big position in a stock that has worked in my favor recently. So no, I like that idea and that way to do it. But it's of course easier said than done also to you need like a solid framework and just stick with it to sell off the positions at the right time, and be able to also leave some part of the position, you know, just trail it with one of the 10 or 20-day moving averages.
Yeah, and you have sorry, I just don't have the stream up, but you have the plug chart up?
Yeah, I can pull it up. Yeah,
because like plug's a pretty good example. So like this is the difference between like I feel like Minervini and Kulamagi. So if you go back and see around like early September, like September 10th, how it had that really pullback and it was pretty tight in that range.
Yeah,
like Minervini, he's not going to probably get in on this until, I don't know. I would imagine probably September 16th and or 17th.
16, 17, yeah.
And then he's going to have to take a 20-cent risk because he's going to be looking at that $1.41, that low on September 9th as his low. So he's going to have a 20% or 20-cent risk. So, I mean, that's not too big, but he can't take a huge position size based on this one. But the setup is pretty good. And you start to see that there's like 2 or 3 days where you're starting to see everything rise, like, September 11th, right up through the 15th there or 16th. Like you're watching each day just progressively go up, 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 and volume starting to come in slowly. And then it finally breaks out on the 17th. But if it was Christian Koulamagi, he would be saying, okay, September 17th, he starts to see it break out. He just looks, and I'm sure if you go on the intraday chart for that, it probably opened, pulled back like a penny, and then started to take off. Now that one might be hard because if that one just took off right in the morning, you might not have taken it, because I didn't realize this, but I was doing a lot of research and listening to them. And a lot of those guys say they won't chase a stock that takes off in the morning. They'll wait for some kind of pullback to make a setup from that point. Which makes a lot of sense, because, you see this candle and you're like, oh my God, it's up 19% in one day. Like you want to get in right in the morning on that one. But like, there's such a good chance you get stopped out if you don't use some kind of like intraday pattern to determine where your risk is, and or take more of a daily approach like Minervini, where you're like, well, it's got to get all the way down, either to 141, or if he uses the resistance around like 155, something in there where, it's going to have to really pull back for the day.
Yeah.
But those are just like two different options you have to get into these things, even if you don't catch that opening drive where, let's say, something goes up 10%, because, I used to see something up 10%. I'm like, well, you can't touch that now. And now I'm like, no, you could totally touch that. You just need to look intraday and or use some kind of daily stop that, it would have to really pull back. And as long as you adjust for your risk accordingly, you can get in on that. And then you can start playing plug there. And then, sell it after a few days. It pulls back, and on September 30th, you start to see it contracting a lot again. And it keeps touching that 10-day. I mean, it touched it on the 25th, it touched it on the 29th. Touches it on the 30th. So somewhere in there, it should start to alert you like, hey, this is setting up again. You should probably either take a position here. And this is more if you want to be on the early side. And this is why I think Minervini says that, he cheats sometimes, because he's just really good at noticing that. It's definitely more risky. You can get stopped out pretty easy on those days, just because, it doesn't mean it's going to pop off right then, but it just happens to on the October 1st. And so if you had played that perfectly, you would have gotten another big size position in there and been able to ride up that huge move and plug. So, those are, that's like I'm saying, that's how I'm trying to look at stuff now, is more in that kind of detail in terms of me getting in and out. And as always, it's a lot easier to say this in hindsight looking at a chart, but these are good like case studies of like what you should be looking for. But once again, if you focus on just the top like stocks that are moving, you're going to find this uptrend maneuver way more often. And you just find the ones that it continues to work. Yeah. Like, and this is why they say focus on the strong sectors and strong stocks, because this setup happens in those stocks like often, where if it's another stock, it might happen once, but then it's going to be pulling back all the time. It's all over the place. So this is why momentum is like this.
I went to the Rigetti chart now, Dane, and it looks very similar to plug in terms of building a pretty long base, and where all the moving averages except the 200-day one are kind of going into each other. And then you see a breakout here on 9 of September. That's when you should take it. But then again, it touches the 10-day average a month later, or whatever it was, almost a month later, and it continues up again, and this is the gigantic move, so very similar to plug, and very similar to heaps of other charts that we have seen, like but then of course the trick is to get in down here, and if you manage to do that and sell into strength, this would be an easy add, I think, because you can even wait for adding to the position to after you have some confirmation with the high volume and it's actually like a proper breakout and stuff like that. You don't need to be the first one in, I think, when you add to the position, because you are already up a lot.
No, and when one like this starts to actually break out, so like you can look, there's multiple lines of resistance on this. There's the more recent ones, which are between $17 and $18. So if you're using that, you like you said, you can get in way back on the 9th, but I think for most people that's pretty tight. And it had been tapping that 50-day for so long. I mean, it taps the 50-day going all the way back to like, I don't know, May 1st ish, somewhere in there. It's just bouncing off that 50-day. So, if you're looking for a real breakout, I'm assuming you're going to want probably September 12th is where it's really on your radar that it's breaking out. And then if you
This
go
one.
even further back, way back at the start of the year, it got up to $21. But even if you had got in, let's say on September 17th, where it finally broke out above that range, as long as you're using some kind of intraday range chart to get in, you can get in on that day with a pretty good sized position if you timed it right. And then you could still ride that whole move. I mean, even if you get in at $20, the next few days, it's, we're talking some decent return. I think it's, what is this? That's a 12%, and
if
then
you
a
sell.
15%. So it's still like almost a 30% gain.
Yeah.
And then
But
like
if
you
you
said
just-
too, it sets up perfectly to double your position size.
Yeah, it does. And very similar to plug, like in my list, I have heaps of charts that looks like this, especially amongst the higher ADR names. That's where you find these ones.
Yeah, and that's why I said it. As long as your screener is screening for high ADR names, or at least stocks that are top performers, so like over the past so many days, it's up X%, whatever you want to do, it doesn't matter.
And of
Or
course,
return on capital so much, whatever.
Yeah.
Those are all ways to narrow it down to like, because initially, my eye now is getting trained a lot better. So like I can make a screener at night that pulls up, let's say, the top 200 stocks, and I can fly through 200 stocks pretty quick and pick out maybe like 10 setups that look decent, and then start, narrowing down into those and seeing. So the Minervini approach to me, because like you said too, some days I don't have all day to sit on the computer. Like it's actually one day a week, maybe I have time where I can really sit and watch. And that's not even all day. It's like parts of the day I can watch it. So I don't know. In the meantime, I think the Minervini approach in terms of being able to like see a setup and use something on a bit longer of a time frame might be better for me. Where I can like preset my buy and preset my stop loss. So then that way when it triggers, I'm just in. I don't have to even think about it. I don't have to be sitting there all day trying to find stuff. And then, I guess the other option I have too is like on my lunch, I have time to just kind of quickly scan midday and see if there's any setups. Because this has worked for me a little bit. Like on like lunch, I've done it where I pull up some charts and I can see where stuff's pulled back to intraday. And then I can just, if something's not that far from the intraday low, you can take a shot at it there, as long as like the daily setup looks good to me. So, they're all options.
You just need to find what works for you and stick with it.
But yeah, so that's been my primary focus this week, is things like that. And then the trick is too, like, because you take like let's say like a 0.25% risk, or a 5% risk or something like that, whatever, and I'm talking not 5%, 0.5% risk. As long as you're picking decent setups, usually by day 2, you can almost make that stop loss break even like every time. Yeah. That's huge because, sorry.
No, I said like lately for me that has started to be like the greatest feeling, right? When you quickly can just move that up to break even and just play around with the selling into strength and stuff like that. Makes everything
because don't get me wrong, it sucks some days because you get stopped out on stuff because you had moved it up to break even or closer to break even. But like, it's nice to know I'm in 5 positions and all of them are already at break even. So like, I'm not going to lose anything on those positions. Now it's house money. Yeah. So it's just one of those things that you start to play around with. And then because you got to think in terms of your hit rate. Let's say your hit rate is 30 or 40%, something like that. But if you can get like one of those stocks out of the 3 that you're not hitting always at break even, that just raises your chance of compounding even higher every time. So, it's definitely important to pick good setups, but you just have to
this was
be patient and be smart with that stop loss as you bring that up.
This was a big point Minervini made in one of his books. I don't remember which one, but he was participating in that stock championship, and he was pretty even, according to his story. He was pretty even to another guy, and they were like very small amount that was between first and second place. And then the market turned around and went a bit bearish. And Minervini in his book is writing that he knew he was going to win then, because he knew that that was his edge, the downside protection, to be disciplined in a bearish market and just focus on the downside. And then he ended up crushing the other guy in the end. So that is like, to me at least, that's just more and more important in my process as well, to like he writes in many times throughout his 2 books, to improve the worst case scenario as quickly as you can sometimes, you know.
Right. No, and it's extremely underestimated how quickly you can get that up, and you know, it's not that, like, you know, nowadays I'm not bringing my stop off just to 0 just to do it. You know, I'm looking at kind of how the previous day went, what the low was, maybe looking at a moving average, that kind of thing, and adjusting it to that. You know, I'm trying not to think of just in terms of just mathematical numbers and what is the chart telling me, like where does it seem like I can probably put it safely where it's close, but it's not going to just get triggered on noise, you know, that kind of thing.
Yeah. I was
And
going to
that's
say,
kind of its own art.
when we talked about the hit rate earlier, I was gonna say something that I forgot, but Minervini also operates with pretty high stop losses compared to a lot of other traders, and but his average stop loss are pretty tight, but he sets them at like 10% and stuff like that.
Yeah, because like I said, I think if you're looking at the daily chart, you understand that the noise is going to be there, and there's a chance you get stopped out on those. But
yeah, but that also helps him improve the hit rate, I assume, because he survives more pullbacks.
yeah, and I think Minervini's approach too. I mean, he's definitely watching intraday in terms of just seeing if a stock starts to work out. So let's say it looks like it's in a compression phase, and the next morning you put a buy in, and like you're expecting it to kind of break out. You know, I'm sure Minervini's the kind of guy that, like, you know, let's say it's been 3 hours and it just doesn't seem like anything. Maybe it's pulling back, it's down 1% or 2. I guarantee you he sells. He's like, no, I'm not doing it. I'll try again tomorrow or something. Like, you know, he's not going to sit there in a position that doesn't look like it's working out. Depending, I mean, I guess it probably depends on the day, and maybe it has to be a little bit more drastic than that. But either way, he's not always waiting for it to hit that full stop loss.
No, because his big point is that he wants to compound. He wants to use the money to gain more in the next one instead, you know?
Right. And I mean, that effect right there is what makes having the faster turnover of trading, you know, lucrative.
Yeah.
You know, I mean, if you think about it, long-term investors, yeah, you might be up 200%, but it took a long time to get up 200%. And I mean, that's a valid strategy, because if you can keep getting stocks to go up 200%, even if it's over the course of a few months or even a year, you know, you're protecting your capital in a way, because it just sits in that stock. It's not like you're, you know, going in and out. And it's probably better for tax implications too, depending on if you're using if you're not using your Roth or something like that, at least here in the States. But yeah, it's just I mean, there's just so many little nuanced things that, you know, I'm starting to like pay attention to, and I'm like, you know, if you can just kind of drown out some of the noise and focus on some of this stuff, like you should be able to be pretty successful.
I like to be at this place now. Like you have performed better than me this year, but in terms of testing and tweaking, we are constantly doing it and adapting to things that we see is working a little bit better. But all these small details, in the end, I'm very sure that it will, you know, be very beneficial to focus on these things, because those small details in the long run will be big on the total result.
Yeah, all of it matters. So it's just putting it all together, and, you know,
yeah,
being
just
smart with everything.
Continue to learn. Like you said, like I saw a lot of traders this bull market said that pullbacks has been working great this bull market, but then in the next one, it might not be as successful, and maybe breakouts are easier to catch in the next one, or some other strategy. So that's also something I look into, like to add like things to you can use in your strategy, different setups and stuff like that, because there's a lot of setups out there that are highly successful.
Yeah, and I will say too, just as kind of like an interesting thing I realized without even trying to is, so like I said, I started to attempt to buy some pullbacks and really stare at the charts and kind of see how are pullbacks successful, what kind of like trends can you find where you typically see a pullback work. And it almost makes me see breakouts easier, because at the same time too, like I see when a pullback is successful, and if I start to see a pullback look successful and it's heading into that territory of a successful breakout, it makes me like more bullish now on the breakout, because I'm like, this one, was a perfect pullback candidate, and now it's running right up like it's gonna break out. So it's funny how if you try like a few different things, it kind of makes you see things in a different perspective.
Yeah. And
So
like we
that's
talked
one of
about
the
earlier with places to add to your position, also you can mix it up. Maybe you get your first position into a breakout and then you add on a pullback
yeah, and
later in stock.
and like I said, it's funny too, because some charts, like the pullback setup to me is very obvious now. Like I'm like, oh, that looks like a really good pullback, and like if this was live, I would have wanted to take that. And then other times it's not, but like the breakout starts to come up, and that's looking better to me. It's like, oh, just take it on the breakout, because that looks like it's setting up for the breakout. So maybe it's going to be another way I can trade things. Like I might do both, where I buy some on the
Exactly.
pullback
Yeah.
idea, and then the other ones are on the breakout itself. So that'll be something I work on as I go.
Yeah.
But in my mind, if you're buying on a pullback, as long as your risk is set, I mean, the opportunity of it going up even higher is pretty good. I assume that the negative side of it would obviously be that your hit rate might go down, because if you're buying too many pullbacks and they're not working out, you're just kind of like losing capital as you're doing it. But if you nail a pullback, I mean, let's say the breakout move was 30%, you might nail a pullback for 50 or 60%, because you get that initial 10 or 20 that you missed before it got to the breakout point. You might have to hold a little bit longer, but not always. Sometimes you can time that pretty well.
No, I guess you can get stopped out a little bit quicker also on the pullbacks. If you're wrong, it quickly get you stopped out, because you tend to use the moving averages then, and if something breaks below them, they can fall into the next moving average. So it's a bit more violent, the move downwards. But when they first break some of those. But Dane, you said you were in. I'm actually just in one position left for my portfolio right now. I took a choice though. I'm pretty. We say we try to improve and all that stuff, and this week I did conscious decision to sell out of a couple of positions before the next day. I was a little bit up on both of them, and I just didn't feel right leaving them on, because I knew I was going to be busy on Friday, so I couldn't watch the market. And I also on Thursday was a pretty bad day. Thursday was pretty bad actually, and then I saw some news later on the day with some banks again, and some people were saying like this is not this is not necessarily so cool news. And then you had just like very messy moves in the market, so I just decided to sell those positions. Of course on Friday one just was a little bit like break even, I think, so I could, I guess, stayed in that one, but it relieved me of a little bit of pressure and stress, on Friday. So I'm happy with the decision, because on the other ticker, it was silver related, and I think that went down 8%. So I would have been stopped out on it anyway. So so far that was a good decision for me, and also a decision I wouldn't make just a month or 2 months ago, I think. So it just feels also good when you not that I predicted anything, that was not the point. I just wanted to take off the risk, which is
Mhm.
something I have focused on a lot lately.
Yeah, and I mean, no matter what, if you look at an index right now, I mean, everything's kind of screaming that like no one knows where this is going right now. Where the
Yeah.
markets are, and like you said, Friday was was up and then it was down and then it was up and then it was
Yeah.
down, and we
Was
ended up
like a
0.5%
carousel.
up, like really all over the place.
Yeah.
So, um, you know, I, I imagine we move sideways for a little bit longer, but I don't know. I mean, if you look at everything's pretty contracted right now after that drop on last Friday. Not
Yeah.
not saying Friday recently, but the week before.
Yeah.
Um,
This one.
so yeah, it's tough to say. It's not like I've stopped trading. It's not like I'm not looking at charts and trying to take names, but it makes me a little bit more hesitant in terms of I'm not taking a ton of trades. I might take like 2 or 3 a day,
Yeah.
and I definitely want the setup to be pretty good. I'm looking for stuff with
Yeah.
pretty solid risk to reward ratios. And who knows? I mean, the news changes so quick, and we could go right back into a bullish environment. We could definitely go into a bearish environment.
We are
But
always one tweet away from total change in the market.
yes, and it is like a snowballing effect. As some people start to get worried, you just see it. Like everyone gets worried, and everyone's like,
Yeah.
sell.
But I think also a lot of things are getting a bit extended, and you saw some of the content names pull back pretty heavily, like the last week, and gold as well. Maybe gold has started now to go back. If I pull out the gold futures here, you see on Friday that was pretty nasty move downwards again.
Yeah,
And I don't know, but it's just like something to notice. And um we talked a little bit about Bitcoin before. Bitcoin looks a bit ugly here now. Maybe it starts to create a downtrend. Um, but still, like if you bought, just a little bit ago, you're still up on the position. But maybe we start to see a few things turning around a bit. Like you said, maybe the market will move sideways a little bit. But we just need to check every day and see what the next news is. And I think all of this just made me a bit cautious this week. And also, it wasn't a mistake, but on Friday, the market was pretty green in the beginning. So I took like 3 names that I thought looked good, and they were all up for me pretty quickly too. So I was very happy. And then on Friday the previous week,
hmm
and then I went to eat dinner, and I was stopped out on all 3 of them. And I was like, this week I'm not gonna, when I see in my lists that things are either mixed or maybe the market maybe the Nasdaq is up, but the things in my lists are red. I just decided to not do much on those days. So I was not very active this week, but the one position I have left is Rocket Lab, which I think is looking pretty strong still, to be honest.
Yeah, had just a bit of a pullback on Friday, but
Yeah.
but yeah, I mean, this is another one that's had a really, really, really good year.
Yeah,
So
it really had. And this group also, there's other names that are strong here, and I just like the volume that has come in recently on the move up that I've been able to catch. But I did trim it on Thursday, so I only have half my position left here now.
well, yeah, and I think that was the right move. It's shown enough times now where it's not been able to push from here, but now you're starting to see a tap on that 10-day moving average. So that'll be a good indicator of how much strength there is in this move.
Yeah, and I got really close to being stopped out on Friday, but it didn't get down. It was very, very close, but I'm still in it. So
Gotcha.
this has been a good trade for me. You said you were in NEGG, right?
Yeah, which I had just bought it more on the idea that this is definitely more of a contraction period. Um, so my
Yeah.
risk is really low here because I've already moved my stop up.
Yeah.
So I think initially I had started it and used that candle on October 10th at 44.30
Yeah.
as my possible stop out. So it's still tight, but if it can break out here, and I think part of the thing I kind of like is it looks like it's kind of trapped between that 150-day moving average.
Yeah.
Um,
It is.
but it looks like it's possibly moving um, along with the 100 as opposed to pulling back with the 50. So it's just I don't know. Like I said, I can't predict the future, but if it could break out here, this is a good spot for it. This was a really strong stock. So
RKL was fantastic, and you had many places you could have taken it, but I didn't focus on these high, crazy high ADR at the time. But we talked about it right on the stream. We pulled it up because this had some insane moves.
yeah, it did. Well, and it was a bit of a meme stock.
Yeah.
And you were just talking about Bitcoin. I feel like it's kind of the same thing. You were talking about you were showing me on Twitter like so many people have gotten wiped out or X. I
Oh
mean,
yeah, that was ugly.
and not only did they get wiped out. I mean, don't get me wrong. This is why I don't go levered into things. Like anybody
Oh,
who don't. It's so risky. and
I
if you
can't
made a ton of
believe
money in Bitcoin, spread that out. Don't keep that in just Bitcoin. Like that's insane to
they
me.
Dana can't believe it. How many people who use that leverage and also those accounts that I posted you. I have not checked this myself and verified that this is true. This is what I saw and I think the source was good. But
Mm,
if it is true, a guy lost 65 million that day.
yeah,
And his account
and
is now 400K. And like
yeah.
how can you allow that to happen to yourself? Like how can you not spread maybe he's ultra rich and has another 65 million on other place. I don't know, but still 65
Yeah,
million is a lot of
it's
money.
it's unnecessary risk for sure.
Yeah. I'm not
um,
but credit to him to get to 65 million in the first place, but
yeah, no, I mean, yeah, obviously he's done something right. But my bigger point being is Bitcoin is mixed in with all the other cryptos, and it sounds like the real wipeout was actually in all the shit coins.
yeah,
Um,
they went to zero a
so
lot of them.
yeah, you got probably the top 10, you can argue, cryptocurrencies that are kind of holding everything up, and then you have 1,000 or 5,000 of these other random names, and those all just got totally wiped out,
Yeah.
and it just goes to show you, I think there's going to be some consolidation in that market. I think you're only going to see a few names in crypto really continue to do well. And it almost reminds me a bit of the meme craze where you're only going to have people go into this crypto or something like that so many times before all of a sudden they start to be like, well, every time, eventually it just collapses and I get wiped out. So it's not really worth, and don't get me wrong, it's always going to be pretty strong. I think crypto's here to stay. I don't think it's going anywhere. But these like big moves where you can turn $1 into $10,000, you're just not going to see it anymore. Even in those shit names, which yes, you can take that kind of speculative gamble, but you could do that in anything. You could do that in a penny stock, and it only takes someone getting wiped out like a couple times on those kind of names to never take them again. So it's the same with like meme trades. You got a bunch of people that bought GameStop and AMC after all the hype and lost everything on those because the hype goes for so long and then it runs out. And I don't see the same with Bitcoin. And how many times can you put like you said, like a big amount of your account into one of these cryptos and have it pull back 30% and stay bullish?
Yeah. And you
I
don't
mean, I
hear
know some
about
people can, but
yeah. And another thing, like this is the meme aspect of it. But you see so many people are just jumping on it, talking about it, and it's like, yeah, I don't know. I know too little about Bitcoin and also the blockchain. Um, technology and all that stuff to say something with confidence, but all I know is that um, I'm careful in this space.
Yeah, I mean, don't get me wrong. I think the chart's set up fine. I think you could trade crypto easy, but my
Oh
my
yeah,
big thing that, like, if you wanted to sell me on something, the whole idea of stable coins and the US being able to push the dollar into a bunch of countries, and a lot of countries that are third world nations and whatnot, they get screwed by the banks that take advantage of their ability to get their paychecks and to actually spend their cash. It's not like first world nations where it's kind of a given and you don't have to worry about this kind of thing. It's almost predatory in those countries because, number one, no one really wants to put up the money for the infrastructure for those people. So the benefit of them using crypto is huge because they can all trade with crypto. They can keep their money in that. And some of the unstable countries where, like, your currency can just get inflated and drop overnight, like, that's where you're going to see these really survive. Because if you're living in some third world country and every day your currency changes by 10-15%, well, why not keep it in crypto? Like, it's almost safer in a way, you know what I mean?
yeah,
So it all depends, but I think for that reason, and I think just the ability to tag something to the dollar and use it as a trading vehicle, I don't think that's going anywhere. If anything, I think that's become more implemented. So I think names like Ethereum and that, I do see the bullish argument there. I've never owned it or anything like that, but I feel like if I was really trying to take one, with a little bit more like a fundamentally sound narrative, that would be the one that I would be focused on.
yeah.
And
I'm
obviously, Bitcoin's just like the OG, so that just is always kind of its own thing. But
yeah. It's I don't I don't know. I feel like has been my uh, slowest and most careful week in a while.
yeah, I think I'd agree with that statement with me.
Yeah. And like I said, I'm mostly in cash right now, so uh, nothing too exciting going on, But I'm trying to. I saw an interview about Bitcoin the other day. Actually, I tried to find it now. I can't remember the people on it, but it was a good conversation, a very good discussions, and I don't know what I concluded with, but it's just it was. I don't think we spoke about it on the last stream, but that Friday was rough for a lot of people, and I saw even some people were losing everything. So
Yeah,
and then and then it takes a couple of days, and then starts to be like writings about how everything between Trump and China was kind of like a misunderstanding in language, which makes it more. I don't know what's going on, but it was rough that Friday, and definitely something to pay attention to when you try to analyze things, because that drop can be like, you know start of something also, in a more bearish way.
yeah, and I think that's like you were talking about with Minervini earlier, is really protecting that downside. So if there is a day like that where everything just pulls back, like, you just don't get wiped out.
Yeah.
That day, even though that was like a rough day, I think I was actually up on that Friday. I
Oh
don't
yeah.
remember.
Yeah, I
Um,
was down a little bit, but that was only because of those three positions that I took the same day. You know what I mean?
yeah,
So
yeah,
the lesson for me, because I saw in my lists they were red, and the market was green, and I still took them. So that was my lesson from that day. Like, I should have listened to the lists instead of the Nasdaq was up when I took them.
yeah. And I agree. I had the same feeling that morning. Like, my screeners were being kind of strange. Nothing really was popping
Yeah,
up, and I was like, "Oh, that's
strange.
weird." And
Yeah.
then it wasn't weird. Then I was like, "Oh, that's because there's literally nothing going on, and the
Yeah.
volume is disappearing,"
Yeah.
which I look back to, and I know, the whole China news came out with Trump and them, and that's what caused the actual pullback. So it might have just been that there wasn't much volume that morning, and that got compounded on top of bad news, which is what led to the actual pullback. But either way, to your point, those are probably days where, like, when you open up and there's not a lot of volume pouring in, that's probably a pretty good sign that that day's a good day to be a little bit hesitant, unless
Yeah.
it really turns. If it really
Yeah.
all of a sudden starts to kick off, and then that volume comes in a little bit later in the day, then you can go off that. But
Yeah.
if it's the opening day and, like, you're like looking and there's like barely anything up, that should be a red flag that that's probably not a great trading day.
Yeah. I'm a little bit happy too, because one of the names I took on that Friday was BBAI that I got stopped on, but this week I made back the loss on the same ticker.
There you go.
Yeah. So that was good.
Yeah, some of them, and that's why I feel like if you gotta just remember too, if you get stopped out on something, like, the setup sometimes just takes longer than you anticipate. You know what I mean?
Yeah,
Like, there's nothing you can do about that, and you have to go back in sometimes.
I saw I haven't finished the video, but there's a video between I think his name is Norwegian. I'm pretty sure his name is Norwegian, but he is from the States. His name is Leif Søreide. And he is a pretty well-known trader. He's on Trader Lion a lot. He's very good. But they talked about that, Dane. They talked about when you see the breakout happens and it turns around and it actually drops below the base even, and then it takes a couple of days and then comes the breakout instead. It's like a delayed breakout. They had a name for it. I don't know what they called it, but I've seen that many times. For example, in you, everyone got shaken out. Which day was it? On hold on, was this the name? Yeah, here on this day, 19th of August, right?
Yeah, I figured that was the ticker or the candle you were going to talk about.
This is what made it my nemesis, because I took it here on 18th of August, and then the next day it starts pretty good and then just drops, and I think everyone was shaken out here. But then you see it still wants to go higher, and it does finish the breakout here.
And I will say,
yeah,
if just to Minervini's point, if you had looked at that last area, 823 was the low from August 1st, and it got down to 823. And the next day, it also hit 823. It's a really good sign on a pullback. 823 has really strong support.
Yeah, so you could have taken a position just on that.
You could have taken a massive position and just set it at 822.
Yeah.
If you got in around that, you could have taken a really big position and set it at 822. Like, I'm talking like 20%, and you could have killed it right there. So those are the kind of things I'm saying. Like, you can see those little nuances there.
Yeah. And this is another stock also where here on 8th of September or even 9 of September, you could have added to the position. But then you would probably get stopped out here on Friday, 12th of September. But still, it would have been very close. And just another example that there are ways to get a high position into names that moved even from that point. It moved, if you take today's price, it's 77%.
Right.
So yeah. But that was interesting, because I've seen that happen a lot. Like, you get the breakout, then it fails, then it comes still.
Well, that's part of the reason I started looking into pullbacks, because I was just looking at like a bunch of charts. I'm just like, God, if I was just looking at these pullbacks, like, there's so many of that are like really obvious. Like, breaks the 10-day, and then the very next day it pushes right back up through, and then it takes off. And I'm like, man, if even if you just looked at something like that simple, you could have timed a ton of these names and bought at a, like, if the base is, let's say, at like $10 and you're able to buy it like 9, and then it goes up to 15, like that extra dollar on that, makes a huge difference.
I was in it, and I added to a 20% position here, 29th of September. and then it did move in my favor, and it pulled back, and I decided to not sell, and then I got stopped out on the next day, and it was a break-even trade for me. It erased. No, I gained a little bit on the first 10%, but then, like you said, it found good support on 260 almost, and then it still wanted to go higher, and it ended up being a mass. If I had if I had my 20% position into this one, it would be amazing, you know.
Yeah.
So this I've seen so many times, and like you said, if you can spot a resistant point, maybe that's where you should go in heavy.
Yeah. No, for sure. And that's why I said you focus on these names that have these really powerful moves upwards. It just clarifies it. You're going down to, like I said, you should be able to narrow it down to like 200 names on any given
Yeah.
day.
Yeah.
And then from there, you're going to narrow it down to probably like, I don't know, 10 that are setting up,
Yeah.
So, but there is a lot of opportunity depending on how you're looking at stuff. So whether it's, and once again, as always, none of this is financial advice. It's really more entertainment than anything. But
if you are new, please
yeah.
understand.
But so like pullbacks are definitely more nuanced. So
Yeah.
I'm not saying to buy pullbacks like that I'm trying, but I had really good results with them. I mean, I think of my hit rate when I was doing pullbacks was well above 50%.
Yeah, that's very good.
My timing of selling them has not been perfect. That's the only reason I didn't really outperform, which I'm working on those rules.
Yeah.
But that is what it is. I mean, it's just
I think for this coming week and tomorrow, I have a short list here of stocks that I just want to watch a bit. One is CRDO. I should have thrown it out actually, but I kept it in the list because of Friday. It was pretty strong. It went up 5% on Friday. This is a bigger market cap, but still ADR is almost 8%. And it's kind of building a base here, but then came that bad day it had on Tuesday and ruined a little bit everything. I just want to see where it goes from here, and maybe this will be one of those delayed breakouts like we just spoke about.
Yeah, I just want to see, honestly, like, I'm looking at this chart. I just want to see that 10-day get back above the 20.
Yeah. So
and,
I
somewhere
hope
in
maybe,
there,
I hope
that's
maybe,
usually,
yeah, no, I agree. It needs to go a bit more sideways and get more tight than it is right now. But I saw a lot of people also after I got this in on my list were monitoring it. And it had some very good volume coming into this move. And yeah, if you can build a base here and the market continues to be bullish, maybe it can be interesting eventually.
yeah. And, you brought it up last time, and I've kind of adjusted. I kind of eliminated my upside for market cap. I just find like, big names can still move pretty good amounts. And yes, it's less often, but it almost makes for cleaner charts.
They are cleaner. And even like you said earlier about Minervini, if you can, I feel it's a bit easier to get like a 15%, 10 to 15% on those,
Yeah, and these ones usually the risk from the buy to the stop loss, you can get tight enough where you can get in on a day and take like you said, like a 10% position at least. So it's really worth your while. And then it might not happen you're not going to be up 50% a day like some of the crazy names, like that if you're looking at random shit, but but if you can do it in a week, like who cares?
Yeah, no, I agree.
And even if it's up 20%, that's enough. That's good.
Yeah. And I've also feel like those can give you the chance to add better than the crazy stocks.
Yes.
Yeah. Another ticker I have on the list is ZEPP, ZEPP. It's a bit messy and it has moved a lot, so I'm not sure how interested I will be, but it kind of moves now on the 20-day moving average. So let's see where this goes. a bit
Yeah, I mean,
volatile
ZEPP's
though.
been super strong.
Yeah.
I've watched this stock, and every time it goes up, I'm like, "You're an idiot. Buy it."
Yeah. Yeah. And
um,
this has more than 10% in ADR, and on the chart there's so many places that, like you said, now you could have taken this one. So I just assume maybe I'm a bit late, but I just like to have them on the list to see.
yeah,
You know, if it
uh,
breaks some of my lines on high volume, and the market looks good, I'm jumping in, I think.
yeah, and my I see this chart, and I'm watching as that 50-day catches up, because that
Yeah.
is
Yeah, and
really close.
that's one thing I liked about it. You know, I used ATR percent over the 50-day, and this is just like one time above the ATR percentage above the 50-day. So it's getting it really catches up now.
Yeah, it's incredibly tight. In the 10
Yeah,
and the 20 have been,
yeah,
right together on this one. So
yeah,
this is one you can take anywhere in here.
yeah,
The earlier you take it, you're gonna get stopped out probably a couple times maybe. But yeah, and if you wait for like a clean breakout around 61, 62,
yeah,
yeah, it could really make another move.
yeah. Then I have LITE, LITE,
Yep.
which I also think is building a nice base here, and the chart is pretty clean up until here, you know, and also not so extended anymore. But this just needs a proper breakout.
Yeah, and this one really reacts well to the 10-day moving average.
Yeah. And the volume has dried up now lately, and yeah, I'm just gonna keep it there. The next one is ESPR, which is
These
also a
are
bit
all you're
messy.
looking literally at every name I look at now.
Okay. That's good. And this one actually broke out on Friday, which was pretty strong, you know, on Friday, because it was a messy day. But according to my lines, I might be an idiot with my lines, but it went over the one I was drawing. But I'm not really. I wanted to move sideways a bit longer because the moving averages are a bit messy at this exact point. But yeah, that's why I have it on the list if something changes.
Yeah. Yeah, I mean, as long as this, like I said, this is another one where it's close to that 50-day, so
Yeah,
that's a solid sign.
yeah.
It always is. Um,
Um, the next one is PI, which I kind of like it right where it is, to be honest. But it didn't have volume on Friday.
yeah, this one's a little choppy,
Yeah,
just in terms of like it's it looks like it has a lot of like cup and handles that like don't work, you
yeah,
know.
and the moves, like the big moves, which is natural, but the big moves comes from the earnings report, and the earnings report, according to TradingView, is in 10 days.
So something to think about.
Yeah. And I know you had you tried this one, but I added DFLI to my list also.
Yeah, no, DFLI I nailed on what was that? October 15th. That I had just
Yeah,
literally bought it the day before.
yeah, that was awesome.
And once again, it had just been coming up, and I thought it looked like it had broken out, or not broken out, but it just looked like it was really riding that 10-day moving average. And
Yeah,
this is something you see with a lot of these names that move really fast, really hard. So this was on September 23rd. So you got a 30-cent stock, pushes all the way up to 230.
yeah,
And then pulls back. It taps the 10-day and start on the 10th and starts to bounce higher. Now, ideally, I would have gotten in on October 13th.
yeah,
That's like the real day to get in. But either way, I got in on October 14th, and I think I just used the low of the day because I think the risk wasn't very much. Like it didn't move much that day. It was a pretty, I think the overall day was only down 2.5%. So it wasn't like this crazy move or anything like that.
yeah,
And then, the next day it just took off, and I didn't play it perfectly, just because I didn't move my stop loss up like too quickly. So I ended up selling like just above $2. So at its high, I was up like 70%, which in hindsight, I should have just at least trimmed somewhere in there. But it's always easier to say that in hindsight. But I ended up still getting like I don't know, like a 30% move or something. Where did it close at $1.97? Yeah, so it was a little bit more than that. It was like 35% that I probably actually got on it.
On a day.
In a day, yeah. So I
Yeah.
mean, and I think it was like almost a 3% position. It wasn't super big just because
No,
the
but
risk reward from the day before wasn't crazy.
yeah,
But
I was
still,
gonna
I mean,
say,
huge.
like this chart scares me a little bit, you know, especially when you had that pullback on that day that you're talking about, and then the drop the 2 days after.
Well, I find a
But
stock
again,
like this. This is
yeah,
one where honestly, I'm probably only going to be in for a day, even
yeah, that,
no matter what. Like at the end of the day, part of the reason I set that stop loss where I did was because I figured if it ends the day pretty high towards 260, I'm probably going to just sell out anyways. So
yeah,
I left it open in case it pulled back up. Because if you look at the intraday chart, it had made it to 261 and then pulled back to like 230 and then went back up to like 250 something.
yeah,
Which, I guess in hindsight, maybe I should have been like, okay, it's getting lower highs. So that's probably the end of the strength.
yeah,
But you never know because I mean, if you look at before, I was looking at October 2nd saying like, okay, this went up 70 some percent.
yeah,
And then the very next day up another 70 some percent.
exactly.
So I'm like, you don't want to, you definitely got to be careful because it's definitely a fast mover, but you also don't want to put it too tight that like you miss another 70% move.
And it did the same in July 21st and 22nd of July. You had two
Right.
big moves.
Yes. So I think that's what I was looking at. Is I was like, this one tends to move in two big moves.
Yeah.
So
And also, I guess on 25 of September and 26th of September, even 29 of September.
right.
Yeah.
So yeah, it's one of those names that like it's not. I'm not afraid of looking at these names either because this is definitely more of like the Qualamagi type play where
Oh, yeah, yeah.
you're just looking for something rocketing.
Yeah.
And
No, but
if you can find a good entrance, you can take it.
you can take it. I was just maybe I would consider a little bit of a small position if I'm not secure in like. But then again, if I can catch it at a good entry and I see the volume, I'm going to jump in with my usual position, I think, on this one and just quickly raise the stop to break even if it continues to move in my favor.
Yeah, and I mean, whether you do that or you just keep your risk low,
Yeah.
you don't have to take a massive position in something like this because honestly, if it goes up 50% a day, even if it was like a 2% position,
Yeah.
that's still 1% for your account.
Yeah.
So it's that's a great return in one day alone, anyways.
Yeah.
Sure, if you can get a 5% position in something like this, because you find that sweet spot where, like, let's say on Monday it opens up and it's like $1. What did it close at? 136. Let's say it opens at 140, drops down and hits like 135, and then starts taking back off. Well, if you can get back in around 140 and 135 is your low, you can take a decent sized position there.
Yeah, I agree.
So it's just kind of watching these kind of things as they do things.
Yeah. The next one I have is a STRL, a little bit of a more expensive stock, but still, if you can afford some shares here, I think it looks a little bit interesting here, and it's also not too extended. But it needs to break out, of course. I'm not saying I would buy it exactly where it is now.
Right.
But I kind of like the chart a little bit. It kind of moves a bit tidy.
Yeah, I mean, just this being a more pricey stock in terms of just the sheer dollar value for each share. It looks like the 200-day moving average is pretty solid. It breaks the 10-day a lot, but it rarely breaks the 20.
Yeah, true. It dips
So if
below
you're
it
looking
a
at a
few times.
long-term stop loss for this one, that's what I would be looking at. I mean, obviously you can trim after a few days, but like the long one, if your end of day is below 20-day moving average, I mean, you can hold this thing for a few months and get returns.
Yeah. And then I have ANRO, which is I think you brought this up because the name is Alto, right? Alto Neuroscience.
Yes, ANRO was one of the names I also caught for a big move.
Yeah,
Um,
looks a bit like DFLI.
yeah, and I think I got stopped on this one or something. I don't remember what happened because but this was another one of the, and I've been watching it too because I mean, even in when since it's pulled back on October 14th off that 10-day, you can see how this one now is really surfing that 10-day moving average.
Yeah, it
And this
does.
is what Kalamagi talks about, and that's why I'm saying in here, if you can get in on one of these days and either use that 522 as your stop or just use the 10-day as your stop,
Yeah,
or lower the day, whatever you want to do.
yeah,
You can take a decent sized position on this, and if it can, reach back up to like $9 in the day,
yeah.
that's 30%.
Do you know what the news was on that day, on Friday?
I do not. So I'm sorry. I'm sorry to say I didn't notice.
No. Then I added just before the stream actually DK.
God, it's terrible. I know every one of these tickers.
Yeah, but this one is a bit more rough looking, I think, because it moves a bit more violent and breaks like the moving averages and stuff. But yeah, you got really it
Yeah, I haven't
closed
looked at
tight at
DK
least.
in a minute, but
Yeah, no, I've had it on my list before. I kicked it out when it broke down here, but now I added it back because yeah, I don't know.
no, I mean
Probably
this one has potential. I
yeah.
agree.
And then the last one was IVVD, a biotech company. Bit extended maybe, but nothing too much.
Yeah, but this is another one of those ones that just kind of moves pretty
Yeah,
fast if it does.
yeah. I'm maybe least excited about this one of all the ones, but I just I just thought it again. If the market is good and it breaks out on volume, I might take a position.
It looks like on ANRO that they have a depression drug. Maybe I did actually look at this now that I'm looking at it. I think I just forgot about it. But they have a depression
Yeah,
drug that shows a positive biomarker, and that says it was a month ago. And then they got fast tracked by the
yeah.
FDA. So I think
I
that's what the news was.
I see it now, and I also I remember this now because I read about it.
Yeah, I honestly now that I'm reading about it, I do think I peeked at that news.
Yeah,
So
yeah. I think
I promise, I swear I
maybe
looked.
yeah. But we brought it up on the last stream. I think maybe we went through it even there. I don't remember anymore. It's so
Yeah,
many
maybe.
tickers.
Yeah, there's a lot,
Yeah,
and that's why I said, like, if you can narrow it down to just 100 names or 200 names, it just makes it a lot easier to focus on setup and stuff
yeah.
that's really moving.
Uh, honestly, this is like one of the. It's not a revolutionary idea or anything, but lately I'm just um, after the market close, I go through some scans that I have and I add all the tickers from all my lists that I have created into a list that I call today, and that helps me just focus on, like you said, just a few names on the
Yeah,
day. And then I just quickly, if something is good on those, this is where I take the positions from, together with some volume scans that I have, and also like I know you use this as well because you kind of gave it to me, like the if a stock moves between 4 and 8%, I also have a scan for those, which I
mhm,
check regularly between the first 2 hours. So this is kind of where I focused it when the day opens. This is all the stocks that I pay attention to, and I just block out a lot of the remaining ones, and then I do the same the next day.
right.
So I'm updating the lists, daily. So in that way, also you keep your finger on the pulse a bit.
Yep. No, that's what you got to do. That's
Yeah,
how it's the only way to do it. I mean, yeah, you can screen intraday, like I said, if you're able to watch, but even screening intraday, it's tough to focus on too many names, and
yeah,
then you're trying to do stuff quick. So there's that.
yeah, exactly. And like if you have like 10 names that you think you are all breaking out, which one is the best one of them? You should have seen that in advance maybe, and then it's easy for you to make the right decision.
Right.
I mean, Navini talks about this. He goes way further though, but you need to go in with a plan, you know. And he talks about like if your internet connection breaks, what are you gonna do? All those things. I'm not that extreme yet, but it is definitely a good point to just try to think like what if and what do I do if this happens and so on. Which one will I have the main focus on for the day?
Yeah.
But that
No,
means you have
I
to
mean, it's
do
all
a little.
true. So,
Huh?
I said, no, I mean, even something as crazy as that, like, I guess technically it could happen. And if you're trading and, Minervini's not moving, thousands of dollars, he's moving hundreds of thousands of
Yeah.
dollars,
Yeah.
so it's a little different.
I've had some issues with interactive brokers, like their website is, crushing. What do you call it? Like when it doesn't work.
Lagging, or-
At the same moment that I'm gonna buy something, it just goes and loads.
Yeah.
So
Yeah. I mean, very rarely I get like an error on Fidelity, but
yeah,
it does happen occasionally, which usually I just have to back out and go back in real quick.
yeah,
Which, yes, it's frustrating in the moment, but I've also been trying to do what's it called? Conditional buying. So like, I say, only buy on this at this
Oh, yeah.
point, and then immediately trigger a stop loss. So then that way I don't have to worry. I just when I put the buy in, it's already gonna go exactly to the plan I put in. Like I already know
Yeah.
what my loss is, possibly that kind of thing. So
yeah.
so hey Mom. Hey man, I do gotta get going, okay?
Yeah, that's all good. I think we have covered everything that, like I said, it was a bit of a slow week, so I didn't expect to have so much to talk about today, but I think we have touched on what's been going on.
Yeah, I mean, and like I said, I'm just slowly adjusting some of the things I'm doing. So that's kind of the big difference for this week for me is, I said it before and I put it on the stream, that, I'm just trying to take each position more individualistic as opposed
Yeah.
to just having very general guidelines, which,
Yeah.
the general guidelines is okay, but like, I feel like you need to be a little bit more nuanced, which just comes with understanding everything going
Yeah,
on.
experience. Yeah.
Yeah. Well, because like, a good setup with low risk, like why am I going to take a 2.5% position when, I could take a 10 and have like pretty safe risk? I should be taking advantage of that and making sure I'm taking a good size position where, maybe there's one that's a little bit more skeptical, but I like the setup. So yeah, I can only take 2.5, but like, I like it. So I'm going to take that one.
Yeah.
So,
yeah.
But, yeah, and then other than that, sorry guys. Yeah, I bricked my PC. I messed up my BIOS, and I can fix it. I got the parts now. I just need to do it. So hopefully I'll have my PC back up, and I'll start posting market strength. I have it on my laptop, but it's not like updated and it's all messed up. But I just at least have the numbers, so I will add everything back at some point.
Yeah. And also, we got some new people into the Discord, so come and join the Discord, everyone that watch, or all the 3 people that watches this stream. Come to the Discord.
Well, and at least I do check the Discord every day. I know there's not like a lot of messaging going on there, but like if you see a setup or something you're interested in, I feel like it's worth posting so we can all kind of talk about it.
Yeah, and while you are there, I posted something in the Laughingstock wisdom section recently. So if you want to get some advice on investing, just go there and check out I mean, you don't get that kind of advice for free anywhere else, I think, Dane.
It's like Confucius quotes.
Yeah. No, I think that's a correct statement.
It's very in depth. It's very thought provoking.
Yeah.
That's kind of what we're looking for here.
Yeah, and all free. It's all free.
Sure. All free.
Yeah.
All right, everybody. Enjoy the rest of your weekend. Johnny, I will be in touch with you, I'm sure.
Yeah, and I hope this coming week will be more stable, but sadly I don't think it will be.
I think it's going to be up 10% on Monday. That's
Then
my
I'm all in.
guess.
Well,
Yeah,
I'm all in on
I'll be buying
EGRX
everything.
already.
I'll buy everything.
Yeah, about everything. All right. See ya then.
All right. See you, everybody.
Bye bye.